Yeah,
Andrew Jacobson, welcome to Closes Club 12, my friend. How you doing?
great. Thanks for having me, guys. Sorry for the technical difficulties there.
Let's share the team. Let's go down to slide number two. And Anders, real quick, I'd mentioned your story of you joining Jake and Gino, but really discuss that first deal that you did in Chicago. Talk about that first painful deal you did. And I think the light bulb went out there saying, I can't do this by myself.
Yeah, I I started investing in 2017. I invested as an LP just for some passive income first, and then I bought a handful of deals, did a couple flips, and I held on to a 4 unit in Chicago. Um, End up being a complete nightmare, the biggest disaster of a deal. Luckily I got such a good deal for it and bought it so cheap that somehow I still made a little money on it in the end. But it motivated me to stop buying small deals and just focus on the big stuff. I wanted larger assets, more units, and just less headache. And that's what the larger deals have brought.
And what were you doing at the time? You're in sales, correct? You were selling solar and you were doing other stuff, correct?
Yeah, I was selling solar panels door to door, residential, and yeah, I was pretty good at it. I've been blessed to be good at sales, and was always one of the highest producers in the industry. But like you mentioned before, Gino, I'd wake up the next day after having the best month, week, day ever, and just think to myself, oh, I got to do this all over again. Like this is
It wasn't Cylindra, was it?
No, it was not Cylinder, bro.
Okay, good, good, good. Because I was gonna have to check him at the door. Yeah, fair enough. Here we go.
but yeah, it was just exhausting. Just having to always be working for money. Like if I didn't make a sale, then I didn't make any money that day, and I was really motivated to put my money to work for me, so that I could make money while I was sleeping on vacation, and really can build a lot of passive income up to replace the income I was making from sales.
Excellent. So, fun fact, door-to-door salesman for 10 years and was a huge sports fan. What sports teams?
This one's a little controversial right now, but big Michigan football fan. So my dad went to Michigan and grew up there, but I know everyone's, might be hating on the sign stealing thing, but go blue. Uh and then I grew up in North Carolina, and that's it's a big basketball state. So when you're born, right when you come out of the womb, you got to pick North Carolina or Duke. So I was pretty smart as a baby, so I picked Duke.
I guess it's okay for the Patriots to steal signs, but Michigan can't do it. So I guess it is what it is, right?
Man, they got some Michigan fans on the line tonight. You got that
Yeah.
Go Blue going down there.
Yeah.
Go.
Next slide. What do we got on the next one?
Yeah, so I mentioned it before a little bit, just before Jake and Gino, just in sales, really was just exhausted from constantly just having to sell and work for my money, and wanted to put my money to work. So I started really trying to figure out a vehicle for me to get passive income and really replace the income that I was making from sales. And just everything I listened to, read, events I went to, just everyone who was successful just seemed to be in multifamily. And so that's why I got in 2017, started investing. And like I said, did a handful of deals passively, bought some duplexes, fourplexes, did fix and flips, some buy and holds, and then really just kept coming back to multifamily. Wanted to be in the larger assets. And so I had the desire after investing in a lot of real estate deals and investing passively. I saw the benefits and just kind of the vision, the roadmap. And so I wanted to be able to provide other salesmen and sales professionals opportunities that I'd had access to, or similar ones. And I also wanted to make connections with people who'd been doing it. So I was just kind of scrappy and trying to figure things out. And I feel like salesmen are just the key is just being a problem solver. And so I've been able to do that on these smaller deals and figure things out. But 100+ unit just scared me to death. So I wanted to be around people who had done it before and could kind of show me the ropes. And I also wanted to figure out how to speak the language, because sometimes when I'd talk to a broker or somebody who'd been in multifamily for a while, I felt like they were speaking Spanish. And so I wanted to learn that language and understand it. And so that's what motivated me to join the group and to get into Jake and Gino.
And big kudos to you, Anders, because I know, since you joined, you've come to all the events, you've put in the work, you've met the students, you've partnered, you've done the property tours, everything that someone who wants to be successful in multifamily needs to do. And I think more importantly than anything, and I'm sure Lee's can attest to this as well, his story, you became the identity, you identified as that multifamily investor. And what you started to do is you started to speak the lingo. You started to learn how to walk these deals. You started to learn how to raise capital. All of a sudden, I see Anders online a lot. He's on LinkedIn, he's on Facebook, and it's really cool to see that progression growing from that salesperson to becoming that multifamily investor and treating this as a business and becoming an entrepreneur through this business. So I love to see that growth that you've had over the last 18 months in the business. So big shout out to you, big kudos to you.
Thanks. You gotta fake it till you make it, at least. So at least I'm good at that. Yeah, so since Jake and Gino, I mean, it's been really everything that I hoped it would be. Everything that I wanted to join the group for really has come to fruition. So all the deals I've done over the last 2 years have been in some way, shape, or form either brought to me by Jake and Gino members, or I've partnered with them on it. I mean, I've learned a ton. I've learned the language, at least much more than I knew before. It's definitely still learning and trying to grow, and things that I'm still don't have a great understanding of, but I'm still getting coached and reaching out to other members who are still happy to help. So that's been great. And have met coaches and friends that really I can ask any question to, and they're willing to help, and that's been amazing. Now I have ownership in over 2,500 doors, heavily focused on the Southeast, and have some GP partners where we're finding really amazing deals, which we'll talk about one here. And I hadn't been a general partner on any deals before I joined the group. And so when I joined, I was able to meet partners and other GPs who are helping me to navigate syndications and how to get into it, and introduce me to amazing partners. So it's it's been a great ride, and excited to share some of the deals we're working on.
Excellent. Jump in. Let me see the first deal.
So this is a deal we closed a few months back. This was the biggest one that we'd done in 2023, which is 176 unit. This was in Savannah, Georgia, which is the fastest growing city in Georgia, and just started breaking ground. Just outside of the downtown area is a $5.5 billion Hyundai EV plant, which is the largest development project in Georgia history. So that project alone is bringing 8,100 jobs into the Savannah market, which we're excited about. The deal
8,100.
8,100.
Serious, man.
A lot. I mean, so then if you do the multiplier where you have the blue collars, as far as that, you've got you're talking about that multiplier effect. They need some pizzerias there. They need
Surely you can pick up a few of those folks, right?
Yes, that is awesome. Wow.
That's just the beginning, because Hyundai's come. There's tons of other companies that are starting to try to join them and come to the market, which we're very excited about. This deal, the rent was $500 below market when we put in our contract, with day one cash flow, and we were able to negotiate and get assume the seller's debt, where we negotiated it being contingent on the sale. So phenomenal financing rates.
What were the in-place rents on average when you took over, just out of curiosity?
The average was $1,200 a unit, and in Savannah, 1,700 is what we'd already seen at other properties.
That's awesome.
And why were they selling? They just inflation hit, costs went up, and they didn't move the rents. They were kind of stuck. I've seen that in a few instances so far.
So not in this case. This was really just, we got to give credit to our broker. We have an awesome broker who's just kind of a deal dog, where he'd just reach out to tons of owners and just try to drum up some sales for us. So this was off market. We're the only ones that had the deal, and the seller, from what the broker said, is he's just a transactional seller. So he just liked to transact and buy and sell deals. And yeah, was happy to get this one, out of his portfolio and sold it to us. Sorry to backtrack, really, this was the second property we bought from the same seller, which I can go to a little bit.
You getting him a Christmas present?
And some chocolates or something.
That's all you can do?
Jake,
Wow.
Jake's
Never sell a deal to Anders. Holy shit.
If Jake is calling you a cheapskate, then you're in trouble, my friend. I'm just saying, man. Wow.
Yeah, we're getting him something nice. Got us, our brokers got us 4 deals this year, and yeah, this seller, we're thankful for him too. So
deal. What else we got on this deal? Let's go through this deal. Perfect.
All right. So yeah, this is syndication. So to tell you a little bit more of the story, so we actually were under contract to buy a 160 unit kind of portfolio deal from this seller in July is when we first put it under contract. And a month into that closing, the broker comes back to us, said, "Hey, the same seller has another deal. I might try to see if I can get see if he's interested in selling." And yeah, absolutely. It was directly across the street from the ones we had under contract, and was a nicer asset, better units. He had already done about half the renovations on the units and done a good job of it. And then he came back to us pretty quickly and said, no, he doesn't want to sell it. He just refinanced, has great terms, and this one cash flows. He just kind of wants to carry out his business plan. Long story short, a few weeks later, he comes back. He had liked working with us and said, you know what, this is my last property in Savannah. Again, the seller likes to transact, I guess. And he's like, I'll sell it to you if you want it. And so we put this one under contract.
Anders, do you mind if I dive into this real quick? And it's unfortunate that your seller should have joined Jake and Gino and learned how to manage right, because he's leaving millions of dollars on the table, unfortunately. And I really want to break this down into the buy right, manage right, and finance right, because in your buy right criteria, you've selected an amazing market. You love the market. You understand the value. There's population growth. There's a lot of jobs. So looking at it from the buy right criteria, it looks really awesome. I'm going to jump into the finance right, because I see 9 years of...
I got to know the price per door. I'm sorry. I'm just like, I've been sitting here. Just give me the price per door and I'll back off a little bit.
Well, he's snow plowing. Let's, before we get to the price per door...
Dude, you're jumping from like buy to finance. Like, can we just hear the price per door and I'll shut up? Lee wants to know too. Come on.
What's the price per unit? Okay.
54.
What?
154.
God, I thought you said 54 for a minute. I was about to punch you through this thing. So, okay. Thank God.
So cheap, I was going to punch you through this thing.
Dude, I thought you said 54 door. And I'm looking at this. I'm saying, dude, no, that did not happen. All right.
Well, okay, but take a look at the finance rate. He has
beautiful.
9 years of interest only remaining at 4.6%. Jake Stenziano about a month ago said to me, if you can lock in 4.5% debt for 10 years, do it every day of the week.
Take it.
Anders, you must have been listening to him because you nailed it, right? That's amazing. I like cash flow day one, so you bought right there. And also take a look at the 5-year returns. And you guys have you have a strong asset management play. What I like about your strategy with Ryan, that team, they buy assets that are large enough, and you have a great property management team. So you actually have assets that are larger. It's counterintuitive. You think the smaller assets are easy to manage, when in fact, these larger assets, you can get really great professional property management. And that is your model, to go in there and get these bigger assets and get professional property management to manage these things. So man, kudos to you. Great job.
What year is this, guys? What year is it built?
1985.
Looks for 85 inches. It looks great, guys.
Looks really good. Yeah. Yeah. What else you want to share? Anything else you want to share? Anything that I miss on that?
No, not really. I mean, the returns, we try to be pretty conservative. So these are kind of, we call them base returns, but our 5-year pro forma was to get rents from 1,200 to 1,500 and market rents at 1,700. We have two other properties in Savannah. One's across the street, one's less than a mile away, and our less desirable properties definitely don't have the same curb appeal, and we're already getting over 1,500 a month on those. So, and these ones really, even before we closed, we're already leasing out close to that 1,500. So yeah, returns should be substantially higher than even what I'm showing here.
So I'll speak for Jake right now because I know this is what's on his mind because I can read his mind. I'm using the Jedi mind trick right now. You're buying this at the 1% rule. You're getting the 1% rule at 4.6% debt. IO. That is really powerful. That's why this asset's going to be cash flowing day one. And that's why this asset's going to crush it for you. Because you're saying 15, but can you imagine 3 or 4 years from now, these rents go to 1,700 where they're probably going to be. So this is going to be a real great asset. Even 2 and 3 years down the road, I can see a ton of value for you to be creating on this asset. Great job.
I was saying 9 years IO and I just typed it, so you missed there, Jedi.
What else? Anything else you want to share with this deal? Yes, let's go. All right.
Plan. So we have in-house property management, super light turns on this. Like I said, a lot of the units had already been turned. So these were previously turned units. He did a pretty good job already. We budgeted about 3,500 a unit and had about
It
one.
looks spacious.
Yeah, they are. They're lofts.
Yeah.
So yeah.
I love this deal. I really do. This is great.
Yeah, so we're gonna come in. We'll paint the exteriors. That's the one thing we don't love the exterior paint job. So we'll come in, make it look a little newer. Some minor landscaping. We'll put in a dog park, new pool furniture, and yeah, there's not a ton of. It's really light turns on this property, which we love.
Let me make the comparison of that deal in Chicago that you had, where you worked your butt off. That return on equity, or return, what we'd like to say, the ROE is the return on effort. That's insane, isn't it? All the work you did for that little 4 or 5 unit property, as opposed to this. I mean, there's still going to be a lot of work here, but at least you can justify the work on this property where you have an asset that's newer in a better area with more value add. I mean, that's just amazing. I guess the evolution, and it's only been 5 years to go from such a small property to actually have a framework where you're like, I'm going to buy this thing right, I'm going to finance it right, and I'm managing this thing right. And yes, somebody in the chat box asked, he said a 9-year IO. Yes, 9 years of interest only is left on this loan at 4.6%. That's what makes this deal super attractive. And that's why multifamily has been, not transacting as much the last 18 months, because interest rates have gone to 7% and people want these prices where they're priced at a 4.6 or a 4% interest rate. And that's why this deal is so attractive. You've got 9 more years left locked on this thing. And then this is still attractive if you want to sell it to the next buyer. You still have 3 or 4 or 5 years left on this loan if you decide to do that. Although Jake is saying, don't sell, baby. You got to hold this thing. This thing is a hold for
Dude,
you.
it's 2023 and he's buying 2021 debt or 2022 debt here on the thing, which is fantastic. And
Yeah, that is awesome. That is
no,
great.
I just I really like this. The one thing I'm wondering, did you ever figure out why he suppressed the rents and why he didn't move on it?
Um, he was already leasing when we put this under contract. He was already, marketing the new units, updated units for close to that 1,500 already.
It just wasn't there yet.
Yeah, it just wasn't there yet. So he had turned a majority of these units, but for some reason he hadn't bumped them up yet. But he was starting to. Yeah, it was a little confusing to us.
No, okay. Yeah, I always just love to get the story as best I can to understand why people do what they do, but yeah, you don't know.
Like he just had so many properties in his portfolio that I think he didn't have the greatest property management team. We met them when we did inspections, and I mean they weren't awful, but
Underwhelming. Yeah.
Yeah. So I think they easily could have been getting these rents before we put in our contract.
Yeah.
So Yeah, and then Gino, to your point, the contrast, also just the market. I didn't know what I was doing, and I would never buy in Chicago again. Sorry to anybody who lives there, but just the tenant friendly laws really screwed me over on my
Hey,
four
as
unit.
long as you got an armored vehicle, you're fine, right?
This this market is very landlord friendly, which we love, and people are going to pay rents, and if not, we can evict them. So I won't get myself into the same trouble I got into Chicago.
Love that. What else we got left? What's
Uh,
next? Yes.
yeah. So what's next? So we actually, I wish I could talk more about this deal. But that's it. If anyone wants to reach out and hear more about it, I'm happy to tell you. But next week we're closing on a deal in Mount Pleasant, South Carolina. I live in Raleigh now, but lived in Mount Pleasant and the Charleston area for 6 years. This asset that we got in Mount Pleasant off market as well with seller financing. We just opened up for equity for the raise last Monday, and it closed in 3.5 days, 9.5 million. It's unbelievable asset. I mean, this one's even crazier. It was a family owned property for 40 years, managed by one of the daughters, and their rent was over $900 per unit below market. Mount Pleasant's A plus area, and they kept the assets in mint condition. Really, they just hadn't updated units and kept up where the market is. And so, yeah, super excited about that deal. We'll close it next week. Next year, starting a podcast where I interview door-to-door salesmen and other sales professionals who, like me, have transitioned or at least invest in real estate on the side. So if you're listening to this and you fit that criteria, let me know. And we plan to personally help people get over $10 million into our deals next year, me personally. And for the future, my main mission now, I want to help over 100 salesmen and entrepreneurs achieve the 5 freedoms, which is time, finances, freedom of relationship, geography, and impact. So that's where we're headed.
Awesome.